Every time you open your paycheck stub, someone else has already taken their cut. You didn't write that check. You didn't approve the withdrawal. You didn't even see the money. It left before you touched it. This isn't theft. It's engineering. The most sophisticated collection system ever built doesn't ask permission. It doesn't send warnings. It removes value from your life in real time, automatically, invisibly, before you can even measure what you've lost. Your consent was manufactured decades before you were born. Your participation is compulsory. And the beautiful trick, you've been trained to call it normal. This is the invisible tax machine. And it collects far more than money. It collects your attention, your behavior, your compliance, and your belief that there is no other way to live. Let me show you the architecture of the cage. You work 40 hours this week. The system already knows this. Before your employer transfers a single dollar to your account, multiple jurisdictions have calculated their take. Federal withholding, state withholding, local withholding, Social Security, Medicare. Each line represents a decision you never made. The software runs the calculation in 3 milliseconds. The money vanishes instantly. 7,040 taxing jurisdictions in the United States alone, each with different rates, different brackets, different rules. Your employer doesn't decide what to withhold, the software does, and the software updates itself every time a regulation changes. You are 130 million workers whose labor is taxed at the source, before you receive anything. This is not how it used to work. Stage 1 is contact before consciousness. In 1943, the United States government faced an impossible problem. War spending had exploded. They needed to collect taxes from millions of people who had never paid income tax before. The old system required workers to save money throughout the year and pay in large quarterly sums. Most people couldn't do it. Many didn't even try. Milton Friedman, then working at the Treasury Department, helped design the solution. Take the money before workers see it. Employers would become unpaid tax collectors. The government would intercept wages at the moment of payment. Workers would receive what was left. Friedman later called this one of his greatest regrets. He understood what it enabled. The system could now scale infinitely. If 4 million people paid income tax, it worked. If 40 million paid, it still worked. If 130 million paid, it worked exactly the same way. The bottleneck was gone, the friction was gone, and most critically, the visibility was gone. The Treasury Department's own historical documents openly admit this. Withholding, quote, greatly reduced the taxpayer's awareness of the amount of tax being collected. It made it easier to raise taxes in the future. This was not a side effect, this was the design. Stage 2 is automation of extraction. By 2025, payroll tax systems process billions of calculations per year. Every address matters. Every zip code boundary matters. If you live 3 meters across a municipal line, your withholding rate changes. The software knows this. It uses geospatial mapping, longitude and latitude coordinates, tax boundary shapefiles. It calculates your federal withholding, your state withholding, your local withholding, your Medicare, your Social Security, your disability insurance, your unemployment insurance. It does this for every single paycheck. You never see the interface. You never approve the math. The system talks to itself. Employer software integrates with IRS systems, state revenue systems, local tax databases. The data flows in real time. E-filing, e-payment, e-verification. There is no paper. There is no delay. There is no moment where you could intervene, even if you wanted to. The entire transaction happens in the background of your life. This is what the OECD calls Tax Administration 3.0. The goal, they say, is to make tax collection nearly invisible to most taxpayers. Tax is done in the background, non-intrusive, non-avoidable. The phrase they use is seamless integration with taxpayers' natural systems. You are not paying taxes. Taxes are being removed from you while you do other things. Stage 3 is compliance through complexity. The system now holds 7,040 local tax jurisdictions. Each one has different rules, different rates, different filing requirements. You cannot possibly track them all, but the software can. The software must. If an employer gets the calculation wrong, they face penalties. If they withhold too little, they owe the difference plus interest. If they withhold too much, employees complain. But the system keeps the money until you file a return months later, so employers buy the software. They pay subscription fees to companies like Symmetry and ADP and Rippling and Sovos. These companies update the tax tables every time a jurisdiction changes a rate. Every time a city passes a new levy. Every time a county adjusts a bracket. The updates are automatic. The compliance is automatic. And you, the worker, have no say in any of it. Your employer is not your ally here. They are a node in a collection network. They execute the withholding because the penalties for non-compliance are severe. They are the first point of extraction, and they are rewarded for compliance by avoiding punishment. This brings us to stage 4, behavioral disappearance of resistance. When taxes are withheld automatically, something psychological happens. The money is never yours. You never held it. You never spent it. You never felt its absence in a discrete, painful moment. Behavioral economists call this loss aversion suppression. If you had to write a check for $10,000 every April, you would feel it. You would resist. You would demand accountability. But if that $10,000 is removed in small bi-weekly increments before you ever see it, it becomes part of the landscape. It becomes normal. The research on this is extensive. Nudge theory, behavioral compliance. The World Bank and the OECD have run hundreds of experiments in over 15 countries, testing how to increase voluntary compliance through psychological intervention. They send letters with different messages. They test which phrasing increases payment rates. They measure which reminders work best. They use social norms. They use moral appeals. They use threats. They find that addressing someone by their first name increases compliance. They find that simplifying language increases compliance. They find that emphasizing enforcement capacity increases compliance. All of this is designed to smooth the friction, to make paying feel effortless, to make non-payment feel deviant. But withholding is the master nudge. It removes the decision entirely. You are not being nudged to pay, you are being structurally prevented from not paying. The system does not ask for your cooperation. It removes value before cooperation is even possible. And here is the brutal elegance. Most workers get a refund at the end of the year. They over-withhold. The government holds their money interest-free for 12 months, then returns a portion. And people celebrate. They call it a refund. They treat it like a gift. They spend it on vacations, electronics, debt payments. They do not see it as the return of their own over-extracted capital. The system has trained them to feel grateful for getting back what was theirs all along. This is not an accident. This is the result of withholding plus complexity plus time. The invisible tax machine does not just take money, it takes the memory of ownership. Stage 5 is expansion through digitalization. The system is now smarter than any individual inside it. Artificial intelligence scans tax returns for anomalies. Machine learning algorithms flag discrepancies. Real-time reporting connects payroll systems to government databases instantly. China uses AI to monitor financial transactions as they happen. The software detects evasion patterns faster than human auditors ever could. Estonia has automated nearly all tax processes. 98% of tax returns are pre-filled by the government. Citizens log in, check the numbers, click submit. The entire interaction takes 3 minutes. They do not calculate anything. They do not gather documents. The government already has the data. The government already knows what you owe. You are simply confirming what the algorithm decided. This is the future everywhere. E-invoicing systems in Brazil track every business transaction in real time. Every sale, every purchase, every invoice flows directly into tax authority databases. There is no delay. There is no hiding. The transaction and the tax record are the same event. You are not filing taxes. Taxes are being filed on you. And this is where we arrive at stage 6, the total integration. Your bank knows your income. Your employer reports your wages. Your credit card company tracks your purchases. Your mortgage lender reports your interest. Your brokerage reports your investment gains. Every entity you interact with is a data node feeding the tax system. They report automatically. They report constantly. The IRS processes over 100 billion information returns per year. W-2s, 1099s, 1098s, Every number on your tax return is cross-checked against third-party reports. If there is a discrepancy, the algorithm flags it. If the discrepancy is large enough, you get audited. If you cannot explain the gap, you pay penalties. The system is self-verifying. It does not need to trust you, it already has the data. And the data comes from sources you cannot control. This is not a tax system, this is a surveillance system with tax collection as output. Now let me show you the antecedents. This is not new. In medieval Europe, the Catholic Church collected the tithe. 1/10 of all income. It was mandatory. If you refused, you were excommunicated. Excommunication did not just mean you couldn't attend church. It meant no one could talk to you. No one could sell you food. No one could employ you. You were socially dead. The tithe was collected in kind, grain, livestock, produce. Priests had tithe barns where they stored the harvest. Every 10th sheaf belonged to the church. The system worked because the church controlled the social infrastructure. The threat was not violence. The threat was exclusion. You paid because non-payment meant exile from the only community you had. The mechanism was different, but the structure was identical. An institution with power over your social standing extracts a portion of your production automatically using infrastructure you cannot escape. Second antecedent, feudal taxation. Under feudalism, peasants owed labor and production to their lord. The lord owned the land. The peasant worked the land. The lord took a share. The share was not negotiated. It was owed. If the peasant tried to leave, the lord could prevent it. The peasant could not move without permission, could not marry without permission, could not sell goods without permission. The lord extracted value not through force alone, but through control of access. Access to land, access to markets, access to survival. The extraction was built into the terms of existence. You could not participate in the economy without paying the lord. This is the template. Control the infrastructure. Make participation compulsory. Remove the option of exit. Extract value continuously. Third antecedent, the Danegeld. In Anglo-Saxon England, the Danegeld was a tax imposed to pay Viking raiders to go away. It started as an emergency measure. Then it became permanent. Kings realized they could collect the tax even when there were no Vikings. They kept the infrastructure, they kept the collectors, they kept extracting, the tax changed names. It became the Geld, then the Carrucage, then movable property taxes. But the structure remained. Once a collection system exists, it does not voluntarily dismantle, it finds new justifications, new purposes, new crises. It persists because it can, because the machinery is already built, because the population is already compliant. You are here, let me tell you where. You wake up, you work. Withholding happens. You buy something, sales tax happens. You own property, property tax happens. You invest, capital gains tax happens. You die, estate tax happens. At no point in this sequence do you initiate the tax. The tax is embedded in the action, embedded in the infrastructure. You cannot work without withholding. You cannot buy without sales tax. You cannot own without property tax. The system has removed the gap between economic activity and extraction. It has made taxation automatic, continuous, and unavoidable. You are not a taxpayer. You are a revenue stream. And here is the mechanism laid bare. The business model is simple. Governments need revenue. Enforcement is expensive. Evasion is common. Solution? Remove the ability to evade. Capture the money at the source. Use employers as unpaid enforcers. Use software to calculate everything. Use third-party reporting to verify everything. Use penalties to ensure compliance. The friction is gone. The cost per collection event approaches zero. 130 million people are taxed with almost no labor cost to the government. The employers bear the cost. The software companies bear the cost. The workers bear the cost. The government simply receives the transfers. This is not a conspiracy. This is an optimized system doing exactly what it was designed to do. Maximize revenue, minimize resistance, make collection invisible. But there is a deeper cost. The cost is agency. When your income is taxed before you receive it, you do not experience earning that money. You experience earning what is left. The pre-tax number on your paycheck is theoretical. It is not money you ever held. It is not money you controlled. It is a number on a document that represents what you generated before the system took its portion. Over time, this changes how you think. You stop thinking about the full value of your labor. You start thinking in terms of take-home pay. You negotiate salary in post-tax terms. You plan budgets around what remains. The baseline shifts. What you earn becomes what you keep, and what the system extracts becomes invisible. This is the ultimate success of the withholding system. It makes extraction feel like the natural state of existence. It makes the full value of your labor feel like an abstraction. And it makes resistance impossible because there is nothing to resist. The money is gone before you could react. Now let me give you the survival payoff. 3 rules. First, know the real number. Always calculate your effective tax rate. Take your total tax paid, divide it by your gross income. Know what percentage of your life is being extracted. Do not let the system obscure this with complexity. The system wants you to think in terms of refunds and deductions. Think in terms of total extraction. How much did you generate? How much did you keep? That is the only number that matters.